Good afternoon, traders. Today's Saturday, March 18th. Well, we are now at the conclusion of a perfectly synchronized move down to trap the bears once and for all. I'm going to show you in this episode the key levels that I have been calling out for a month. Actually, since January in some cases, have been perfectly respected. Key levels that I've been calling out intraday have been perfectly respected. Key levels that I've been referring to on the VIX and old Dixie the dollar have been respected. You have been duped. This tweet right here that I intentionally held back, I tweeted a week ago, March 11th, to be exact. I intentionally held that from you, withheld it from you bears, because I wanted you to think you were winning. I wanted you to think you had the last word. When I think, in the end, in the final analysis, I have the last laugh. You have been duped. That up move on Thursday and Friday coming up here, leading up to 3-6, it was Thursday and Friday, March 5th and March 6th, was to fill that gap at 407, 408. That down move since 3-7, March 7th, Jerome Powell, 3-9th, SVB, and what, 310 or 311, Credit Suisse, was perfectly timed with intraday backtest exact precision. You're looking at it right now. How is it that after you filled that gap to make everyone think, oh, see, the liquidity is filled, down we go? How is it then? 3-7, Jerome Powell. That was already timed perfectly. You come down on the 4-hour chart. You come down on 3-7. You come back up on 3-9. Perfectly kissed. Exactly. 401.34, which is the 4-hour EMA 50. You perfectly kissed it. Boom, and then you went straight down after that. Then you started on 3-7, come down on a backtest, come up and perfectly kiss it, and then go down, and that's a black swan event that nobody saw coming? Oh, hell no. That was perfectly timed. The whole SVB, Silicon Valley Bank, was perfectly placed to justify that down move. Perfectly. To make you bears think, oh, we see we're going to crash. We're going down. Here comes the collapse in March. Well, did you look and see what happened this week? We're making higher lows, and we're going back up. So. If everything was so black swanny, why did we stop? Actually hold 383. It's kind of hard to see. Let me zoom in. We went below. Here's 383 right here. Okay, 383 right down here. Right down here, isn't it? Because I'm going to show you a slide that I said last week. Last week. Watch for 383. Last week. Higher lows, higher lows, higher lows, higher highs. Up we go. No? They are running the same play that they did in late December, early January, and you're getting same played, and I've said this time and time and time again. You can't say I'm wrong. I'm like Michael Burry. I'm early. You're getting played higher highs, higher lows. You're getting played. And I don't feel sorry for you one bit. Because you were being jerks in the comments section, which I've already shadow banned you anyways. Nobody else can see those comments. Well. 7 days ago. SPY 383. Did I not say that? Let's have a look closer at what I was referring to. This pink line is what I was talking about. We're going to go down that line and we're going to bounce off of it. And last Friday, a week from yesterday, what did I say? As I have been saying since January, what did I say? 4 hour. The 4 hour MACD cannot go below negative 35. That is the bear line. Full stop. I've said it here. Now it's at negative 31. Negative 35 is the bear line. It's like I have to talk to you bears like you're kindergarten, same age as my son. I have to repeat myself over and over again because it's like you don't get it. So, I want you to call your attention to the negative 35 bear line. That was last Friday. I said, this is the bear line, guys. And I want you to call your attention to the pink line, 383. Because what happened this week? Why don't we zoom on in? Shall we? Haha. Boop, bounce up. Pink line that I called here last week. How do you like them apples? Okay, I called out these levels, but you guys are like, oh no, you didn't see this one coming. Oh really? I didn't see it coming? Bunch of kindergartners, man. Okay, now that we're talking about negative 35. Yeah. This was Friday before yesterday. What happened? Boop. As it has happened. December, January, February, March. I have been saying this in my episodes. But you kindergartner bears don't listen. You keep going back to your emotions. You keep going back to your PTSD from 2022 and want to invoke the past as if it was all glorious. When the data doesn't support your position. Look at this line. We've essentially double bottomed from January, December, January. Actually, we didn't double bottom. We higher load. Higher low. Up we go. No? Go ahead and get your puts, guys. Those of you who wanted to complain to me, I should have shorted this whole move. Go ahead and short it then. Short it. I said that last week. Short it. I know you're not going to do it. Because you know deep down inside, that's not the right move. You know deep down inside, you're going to get played. So, I'm going to remind you hooligans, you bear hooligans, February 4th, I'm going to remind you, I sent this tweet out. If 390 to 400 holds for February and March, it will go down in history as the all-time greatest hidden bull market the market makers kept a secret, and I will explain in April. I see more patterns. 390 to 400. Guess where we closed on Friday? 389.99. So you want to say I didn't see this coming? Who has the last laugh now? I'm sitting here calling out specific levels in all of my episodes for the last 3 months. Specific levels I call out, like this. Like the bear line at negative 35. Or like last week, 383 is the line you cannot cross. It's going to bounce off this line. That all you bears can say is, you just see what you want to see. Oh, really? When the market makers probably agree with me then, because they're playing out to the same levels I keep calling out. So I see what I want to see, call out ahead of time. I'm going to show you stuff on the VIX that I've called out a long time ago. I'm going to show you stuff on the dollar I called out a month ago. And that yet I see what I want to see, huh? Or yet I didn't have the vision to see this coming. When I called out SPY 390 at the time on February 4th, when SPY was at 412. I love it. I just love it when you guys have no retort, or you bears. It's mainly probably like you 1% of you the bears. It's not like 99% of the bears. It's like 1% of you bears who don't say squat for like 3 months, and then all of a sudden they come out of nowhere and leave some stupid comment that I just end up hiding anyway, so nobody else can see it. Why don't we look at XLF, guys? Since we're on the topic of the 4-hour MACD that I just showed you is the negative 35 bear line for SPY futures, actually. Oh, guess what happened? On Friday, higher low notch. Yeah, 4-hour MACD. In my previous episodes, haven't I said something about, oh, higher low notch, higher low. Up we go. Higher low notches tend to stop the fall, don't they? Yeah, XLF. The ones who are most wrapped up in this, shall we say, fabricated crisis. Absolutely fabricated. Because when Credit Suisse fell down this week too, we're still making higher highs and higher lows, aren't we? Aren't we? And that is a fact. Go back and look at the charts when the Credit Suisse supposedly bomb dropped. Oh, we still made higher highs and higher lows this week. So what does that have to do with anything about the news? Nothing. Market makers already knew what they were going to do, and they did it. XLF. Yeah, buddy. XLF on the 4-hour chart, double bottom. 390, 30, 3091. Sorry, 3091, 3091, here and here. But this made lower low, relatively speaking, relatively compared to this candle, to that candle. But guess what? Higher lows. 4-hour MACD, higher lows, XLF. Oops. Yeah, kind of thought so. So, you bears remind me of being duped by Kaiser Sose in the movie, the 1995 movie, The Usual Suspects. For those of you who have not seen this movie, do you want to know how Kaiser Sose pulled off the greatest scam, sitting in the police station talking to the captain? In the film's final scene, it is revealed that Spacey's story is a fabrication, comprising strung-together details culled from a crowded bulletin board in the captain's messy office. That is equivalent to what I've been saying all along. The news, or newspapers in this case, in this movie, was all Kaiser Sose used to fabricate and justify his position and his narrative. That's exactly what the market makers are doing. They're just using the news strung together on a crowded bulletin board to tell the story to you bears, to make you feel like you're back in control, to make you feel good, when all they've done this week was higher highs and higher lows, despite the so-called catastrophic black swan of SVB and Credit Suisse. And now XLF is making higher lows. Higher low notch, I should say. Higher low notch on the 4-hour MACD. You have been duped. This movie is the perfect example of how the market makers manipulate the news strung together from a bunch of newspaper clippings on a crowded bulletin board like in the movie to tell the story. You're getting suckered. Now, let's get over to the VIX. But before we get over to the VIX, you know I like to prime the pump. I love to prime the pump and set up an argument that cannot be refuted by referring to a previous tweet on March 14th, 4 days ago. Right here, I said it's not ready to retake EMA 50, guys. The MACD is too far below the zero line. Okay? I have said that repeatedly intraday, many times in the past, because that is a true statement that is not debatable. That is a true statement that is not debatable, not subject to anyone's opinion. The MACD hasn't made a higher low notch to show a bottom. And what was I referring to? This right here. This was that point I sent that tweet right here. Look what happened in overnight. This was just power hour. This was power hour, the last hour where you all know it just goes back up and then collapses overnight. So, I was correct. It's not going to retake EMA 50. Because if you retake it, you're going to go up, you're going to backtest it, and then you're going to go up even more. You're not going to go up, backtest, and then dump. Okay? I'm priming the pump. What you see on your screen right now, this is for SPY, but this is exactly what the VIX is going to do as well. Starting this week. We have the VIX. As that tweet I just showed you and demonstrated to you with 100% accuracy, time and time again intraday, when you are too far below the zero line, you will not reclaim EMA 50. Look at the VIX weekly chart. Too far below the zero line. This is the weekly chart, guys. Weekly, not daily, not 4 hour, weekly. Too far below the zero line. You will not take back the EMA 50. Right now, it is above the EMA 50. It is power hour that pumped it up there. Just like that slide you just saw a moment ago. It is power hour. This is an impulsive pump, an impulsive, manipulated, synchronized pump by the market makers. All the while, it has no strength to reclaim EMA 50, full stop. It is with 100% certainty. That's why you see wick down, wick down. They're not letting it go higher. It's just a move up to make the bears think you're back in control, but they're going to send the VIX plummeting back down below 20, 100%. That's why you have wick down, wick down. I have said this so many times intraday. I've said this in the past, and I'm saying it again. I've also said in the past, from time to time, let me zoom back in. The EMA 50 up here is equivalent to the MACD zero line. That is a fact. Look how far below on the weekly it is below the zero line and the EMA 50. That's how I know it will not take EMA 50 back. Full stop. This is just a fabricated power hour move. It's going to fall. That's just the way it's going to be. These are the rules. These are the rules that the market makers follow and that I actually apply intraday every single day for the last 3 or 4 or 5 months. These rules work. These rules are respected. They will fall. The VIX will fall. It will not hold this level. Wick down, wick down, huge wicks down. Let's see. The reason why, I'm also going to say, the reason why you guys don't realize, actually, they started priming and pumping the VIX on Black Friday 2021. I remember that day uniquely. That day was the beginning of the bear market. Everyone wants to think it was January. Oh, no, 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 no. They were priming the VIX on Black Friday, the day after Thanksgiving 2021. But what was the difference between Black Friday 2021 and today? Look what it's been doing. They have been queuing up the VIX in all of 2021 to smash you. Look, it's been going up, 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 down, higher, low, surge. 180 degrees difference between today. Look, down, 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 up, still well below the zero line. It's going to fail. Totally different. You cannot use any data points from 2022 VIX to compare to what's happening in March 2023. Full stop. There is nothing you can use on the MACD to say, oh, see, it's going to, oh, VIX at 30, it's going to go up like this. No, it's not. Because VIX started to queue itself in November of 2021. And it's in a totally 100% different spot in March 2023 than it was in 2021, November. There you go. There are facts for you bears. If you actually stop using emotion for once, just stop and look at the data, you're going to see what I'm talking about. Let's look at the daily, shall we? You're going to see other tweets that I have said. Oh, you make this move up and you don't backtest, you're going to pay that. You're going to backtest it as EMA 50 right here. I guarantee it. You're going to backtest because look what happened. Look what. Okay, ever since November of 2022, let's just go December. Up. Here's the EMA 50. Up. Failed backtest. Up, resistance, failed. Up, resistance, failed. Up, resistance, failed. Up, failed backtest. Up, failed backtest. Up. Time for you to backtest, VIX. It's time for you to backtest. But with the weekly too far below the zero line, you are not going to hold this line. Full stop. This is just intraday trading patterns I'm talking about here. The same trading patterns that I preach every single day. It applies to the VIX also, as you just saw in December, January, and February. It applies to the VIX. Wick down, wick down, wick down, wick down. Higher, lower highs, lower lows. That's not a bull. That's not a descending wedge, by the way. No, it's not. That's not a descending wedge. That's a sign. You're going down. You're going way down. That's just the way it is. Last I checked, if this was a real sell-off, you're supposed to be going up. But why are you going down? You're making lower highs. Wick down, wick down, wick down, wick down. Now I'm going to put the dagger in your hearts, all you bears' hearts, in this next slide. You notice all the moves except for on SVB day. What's this? Is this the, let's see, the 9th? Yeah. The biggest move in the VIX was overnight. Overnight. Intraday, down, 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 down. And now it's going to go down. This is how the market maker is manipulating you bears. They take it up and they take it up. So you can't get a chance unless you happen to have bought UVXY or something the day before. You would now be losing money because if you'd have gotten calls at open, now you're losing money. So they take it up in futures pre-market and then they dump it during the day, dump it during the day, dump it during the day, dump it during the day. Look, it's looking at you right in the face. And look at this is the 4-hour MACD. Look at this. Down, cannot cross the signal, cannot cross the signal, down. This one's not going to cross the signal. It's going to keep going down. You have nothing from 2022 to point to explain this behavior. Nothing. Because it's just a totally different. It's almost like saying, hey, so hey, who do you think would win between the 95-96 Chicago Bulls versus the 2015 Warriors? It's like, it doesn't matter. The time frames are totally different. You can't even compare. There is no basis to compare anything from previous, like 2022 versus 2023 VIX. What do we have here? 65-minute. What do we have here? You guys know the 65-minute. I love looking at that. Lower highs, lower highs, lower lows, lower lows. Now, on the 65-minute, the MACD is at resistance, and I bet you it ain't going to cross that line anymore come Monday and Tuesday and Wednesday. It's going to be resistance. Lower, lower, lower. Hello. Failed back test. Failed back test. Aha. What do we have here? Failed back test. It's going down. Oh, there's Credit Suisse. Despite Credit Suisse, this news, I put it right there. Why'd the VIX go down? Why'd the VIX go down? Why'd the VIX go down? So much for your, oh, I follow the news. I'm keeping up with this. This has got to be catastrophic. Oh, really? Then why on this day did the Credit Suisse news not make it go further up? In fact, it made a lower high, lower high, lower high. Huh. Interesting. Interesting indeed. Market makers have you played, you bears. Full stop. Okay. Ha ha ha. 3 weeks ago. Coming up on a month now. I want you to pay attention to what I said. 100%. You will fail. Dixie is going lower. There is no threat for the dollar. 100%. And look at this pattern that I happen to have drawn out. At the time, EMA 50, 104. This is the weekly. 104. Look at this green arrow right there. I counted for it. I said, I bet it can go up there. Well, that's going to be 105-ish. It can go up there. It can peek your head above, but you will not reclaim 104. I said that with 100% conviction. You will not reclaim 104. Reclaim means up, back test to 104, and then up some more. That's what reclaim means. Let's see how the scorecard is. You poked your head up, green arrow, and now you're coming back down. You failed this back test right here, and this is according to the rules I've always been preaching every single day. You could not straddle the candle on the EMA line, or you're going down. Period. I said this a month ago. And yet some of you hooligan bears want to say, I didn't see this coming. Really? So now on February 4th, I said 390 to 400 must hold. I called that number out. Last week, I called out, 383, that pink line, that's going to hold. Called that number out too. 4-hour EMA 50, 4-hour MACD, ES futures. Negative 35 is the bear line. You can't cross that line. And it didn't. DXY, EMA 50, 104. You're not going to reclaim that line. And you didn't. So what are you talking about? I didn't see that coming. I love it. Okay, let's get into intraday. Let's get into the intraday stuff, the tweets. I'm going to short this move. Ha ha ha. Why? The MACD is way below zero line. Again. Just like the VIX is. Okay, so I practice what I preach. I'm not a hypocrite. The problem with you bears is I'm talking to the 1% of you. You have selective listening. You take one thing that I say in an episode and you just extrapolate. You oversimplify and extrapolate that one thing that I say. When I say a bunch of different things together, maybe it's just too complicated for you to understand because you're using emotion to try to figure out this market. I'm sorry if it's too complicated for you. I say these things repeatedly over and over and over and over again. But you have selective listening and only take one word that I say. Like you'll clamp down on the word, oh, he said 100%. Nothing's 100%. See what I mean? It's like, man, go back and listen attentively to what I'm saying. I didn't say 100%. I'm always right 100% of the time. I was talking about the EMA 50 on the weekly DXY chart. I said 100% is not going to reclaim this line, and it has not reclaimed the line as of today. And I said that a month ago now. So, I'm referring to this move right here in this tweet, right there. I watched this bad boy go up. I said, I'm going to short it. Waited for it to go up right around here. I got some puts. Okay, so the MACD is way below the zero line. Its starting point is too far below the zero line. So we all know what happened. Collapse. Yeah, see? It's too far below. Guess what? The VIX, MACD, too far below the zero line. Guess what's going to happen next? Yeah, exactly what you see here on your screen right now. So, failed back test, failed back test. That's what this is, failed back test, failed back test. That's related to this and this. What happens when you fail the back test? What happens when the candle body straddles the line? Yes, what have I always been saying every single day? What happens when that candle body straddles that EMA 50? Down you go. That's exactly what happened. And you're going to see another tweet later when I call out, oops, that failed again. Yep, 2 backtest failures. The only time a backtest failure is okay is if it's part of a wedge. This is not a wedge, obviously. This is just when it's in a wedge. When it's in a wedge, it does a lot of up, down, up, down, up, down, up, down, up, down, like that. But no, this wasn't a wedge. This just collapsed. It's trying to bottom. I was pointing you right here in that tweet, just under the EMA, just under the 1 hour EMA 50. So, support at the old wedge. Yeah. Okay, so actually, no. It's right here. Support at the old wedge, which is right here. Yeah, this tweet is related to this data point right here. Yeah, it's trying to bottom. Okay, so when you're trying to carve out a higher low MACD, which was at the time it would have been like right here, even as the higher low is carved out, the price still goes lower, actually. So in the process of carving out a higher low MACD notch, the price continues to go lower. It's only when that notch is confirmed that then that's it. The price stops. It will not fall anymore. Okay, I said this last night. Let me zoom in since it's not easy to see. Yesterday, I'm sorry, not yesterday. Thursday night. I complained. I said, oof, that EMA 50 didn't touch that line. It didn't touch the EMA 50. I'm sorry, the candle didn't touch the EMA 50 right here. I said, something's not right. I said that on Thursday night, something's not right. And what happened? Ooh, here it goes over the rainbow and then even lower. You're gonna pay the EMA 50 Piper, full stop. You will pay. It may not be that same day, but you're gonna pay, and pay you did. Reiterating again, and this was from March 6th, right? 2 weeks ago. This candle did not touch EMA 50. I'm not biting on this wick up. You must touch EMA 50. No exceptions. No exceptions. If you don't touch it and you keep going up, that means that's the right opportunity to short, because you don't really know exactly where the resistance line is going to be. You know it's somewhere up there, but you don't know exactly where it's going to be. Okay? Unfortunately, it made... Wait. Oh, no. Now, at the time, it was not invalidated yet. So currently, at the time, that would have been just right here. Yeah, right here. But that would have been... Yeah, so at the time I was tweeting it, it was still slightly higher. Current, -6.8 compared to -7.1 previous. So at the time, I said, yeah, you better hope it doesn't go past -7.1. Or it's lower we go. But what happened? We went past -7.1 and lower we go. That's exactly what happened. Scaling puts. We're going lower. The MACD notch is now invalidated. We went below -7.1. That means the notch process resets and you're going lower. So that would have meant, yeah, right here. I got puts, right around here. Went lower. Yep, it's ultimately going lower because we made a lower low on the MACD notch attempt, -7.1 versus now -7.4. Lower lows, you're going lower, right there. You're going lower. previously tweeted this. Oh, yeah. That was on Thursday night. I predicted Friday was going to be down. And that's exactly what happened. Because we were at the top of that wedge right there. Friday's going to be down. And that's exactly what happened. Top of the wedge, back down closer to the bottom of the wedge. Yes, sir. Here we were at the top of the wedge, and we're going to go to the bottom of the wedge. That's exactly where we went, didn't it? That's exactly where the low was. Actually, we double bottomed in the afternoon a little bit later. Actually, we made a slightly lower low in the afternoon right here. Back test the old wedge top. That would have been right here. Right here. That's actually when you want to get more puts, actually. Yep. That's what I said there. Because remember, you're carving out, you're resetting the notch. So you're resetting, meaning it has to start over. The count starts over again. So in the process of creating the higher low, you're going to make a lower low right there. Yes. So actually, as I called out right here, this is when you get more puts. Yippers. Seems like we have a higher low. Oh yeah. Okay. So here's the first notch. Here's the second notch. First notch, second notch. So it's like a twin peak mountain. Okay. So, aha. In 4 minutes, the 65-minute candle closes. I'll hold my puts for the next 65-minute candle open. So I'm going to wait another 4 minutes. Okay. I'm going to wait. So it would have been, I think right here. Yeah. Wait. It would have been here, up, and then down some more. Yeah, I'm just comparing these candles. Yeah, it would have been at this green candle when I sent out that tweet in 4 minutes. So I'm going to wait another, I'm going to wait a little bit more. Yeah, see, yeah, it ended up going lower. Here's the red candle. Here's the red candle. Yep. So, aha, it's near a bottom. I called it right there. I called it right there. Yes. Why did I call it then? Because it made 2 notches now. 1, 2, and it's starting to flatten out. I said, yeah, that's good. That's it. This is the bottom for the day. It's near a bottom. Okay. Got out for a whopping 7% on that scalp. So, the other reason why I got out of my puts, because when I looked over at the 65-minute time frame, here's your starting point right here on the MACD. Here's your ending point right there. I'm like, ooh, you've basically retraced. You've basically at least retraced 100%. That's, yeah, retraced 100%. That is generally a sign of a bottom. That's a good time to get out. That's not a good time to be getting more puts. Oh, no. Okay, right here, this is the journey on the way back up right there. I'll wait for the next candle before scalping long. Yeah, we all know what happened next. Never mind, I'm going to go ahead and scalp because I saw this big push. It's like, ooh, oh yeah. The reason why I was waiting for the next candle is because I wanted to see if SMA 20 was going to flat out reject it and send it back down. I needed to see the next candle. But when I saw the next candle just push up, I was like, oh, that's it. Scalp long. Okay. So in 5 minutes, a new 65-minute candle opens, consolidating now under EMA 50. That would have placed us right here. Yeah. So, yeah, betting $1 the move is up. Actually, it went down, then up, found resistance, and then down. So, I didn't place any trades there. So, you see the manipulation. Look at what market makers have been doing in overnight futures and pre-markets. The big moves are happening overnight. Down, up, down, down, down. See that? This is the type of manipulation that they did in December, late December, early January, this is the type they're doing exactly that right now. Exactly that. Expect more of this heading into FOMC. Yeah! You betcha. Monday, Tuesday, coming into Wednesday. You betcha. All right. Check it out. I keep preaching. Failed EMA backtest. That candle body cannot straddle the EMA 50 line. What did it do? Right there, which was equivalent to right here. Yes, right here. Right there. I called it. And what happened after that? Down we go. Okay? These are simply the rules that the market makers are following time and time and time again. Not time for a trend change. Sorry, it starts at the 5-minute time frame first. What I'm referring to is don't bother looking at the 1 hour. Don't bother looking at the 4 hour, which is what I look at regularly, by the way. Don't bother looking at the daily. Don't bother looking at the weekly. It starts at the 5-minute candle first. It starts with the smallest candle first. Just like when you have a problem with your car, it's usually going to start with something failing, like a sensor fails, right? So that sensor failed. Now it's not taking the right reading, and now it can expand to other problems of your car because one part of the car failed, and that's going to lead to other parts of the car perhaps overheating or not functioning right. The other parts of the car are equivalent to the 1 hour, the 4 hour, the daily, the weekly. You don't need to look at the larger time frames. It starts at the smallest time frames. Full stop. Problems, big problems always start off small. Big problems don't start off big. They start off small. They grow on you before you realize. By the time you realize it's a big problem, like in 2008, holy smacks. How long has this credit default swap crap and all of these, B-rated, C-rated bonds get jumbled in there with AAA bonds, and then they gave it a AAA rating. See what I mean? The problems started small, not big. The 5-minute the 5-minute time frame is where things start. See those wicks down? I'm not digging it. Wick down, wick down, wick down. Yeah, what happened? You went down. Here we go. And here I go. I've called it. I'm 70-30 sure percent. 70-30 sure the move coming will be down. Down. So, new 65-minute candle starts now. Let's see if it's a final move down, then up. Down, then up. There you have it. Here's at this move down. I should have anticipated this better on the 65-minute chart. It's going to challenge the 388.56 pink line. Here it is. Well, here, right here too. That 388.56 pink line was set earlier this morning right here. Guess what? It challenged it exactly. See that? It actually went lower by a penny. It went to 388.55. So there's like, oh, here we go. Yep, 12 minutes to go. Market maker will inch it lower and lower slowly. Take it down to the wire. What I was talking about is the pink line. It's taking it to the pink line. Exactly. That's exactly what it did. It wicked to it perfectly. So, oh yeah, I mentioned this earlier. See, this is futures. They're doing this crap like they did in December, early January. They're doing it again. They're just manipulating it up, down, up, down, up, down. All the while creating higher highs, higher lows. Up we go. So, 4 failed backtests today. 4 of them. 4 of them. Are you telling me SPY is ready for a trend change as of Friday yesterday? Hell no. Hell no. If you can't even take back the EMA 50 on the 5-minute time frame, how are you going to start an uptrend? You're not ready. You have to have some kind of catalyst, and we know what that catalyst is going to be. It's going to be FOMC. We know this fabricated SVB and Credit Suisse and all these regional bank failures, we know that's all fabricated news that the Fed will use as a crutch to pause or even announce rate cuts. Because we know, and I've done a previous episode on this, the current inflation rate has nothing to do with the Fed interest rate. It's that stupid $8.4 trillion of liquidity from quantitative easing, specifically the M2 money supply. That's what's causing inflation. Jerome Powell knows that. The markets know that. The problem is 99% of you bears don't know that. That's why you're so bearish. You actually don't know what's true. That's why I don't feel sorry for you. Because not only are you ignorant, you're like proudly ignorant. And you talk trash about it. God. This is what's going to happen next week, guys. I said Friday was going to be down. Friday was down. I think Monday could actually go up because they're going to use Monday to be up to justify Tuesday to grind down. Then they're going to sprinkle in some bad news to make Tuesday grind down even lower. And then they're going to do whatever bad news that they're going to sprinkle in, that they're going to fabricate into the news, is going to make FOMC grind, Wednesday morning FOMC, that morning grind lower. And then they're going to pump it in the afternoon. Because that's exactly what they did. On February 1st, grind lower, grind lower, grind lower, grind lower, grind lower, pump. Oops, sorry. And I called it that day. I said, you guys, this is bullish. This is bullish. I called it that day. It was actually consolidating under the 405 main channel line. Right here, right there. Yes. I was like, hey, this is consolidation. Boom. It was bullish. So feel free to follow me on Twitter, where I give real-time updates intraday. Don't forget to listen to your favorite music as you are trading. Helps you get into the right state of mind. Helps you get into the right flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.